Hello and welcome to today's event, hosted by Advanced Partners in Capital Concepts. I'd like to get right into things and introduce Lorne Greenfield, who will be taking us through today's content. Lorne, over to you.
Good afternoon, everyone. Thank you for being here, and a big thank you to the folks at Advanced Partners for sponsoring this event. I appreciate the opportunity to share some insights today on how you can optimize what has historically been a difficult exercise in most businesses, but especially in the staffing industry. My goals for today's webinar are simple. I want to give you a better understanding of how a staffing agency like yours can be more profitable than it is now by developing the strongest pricing strategy possible. Today, I'll equip you with the tools you need so you'll know how to charge clients properly. We'll launch by describing a case study from one of my clients, and then summarize the results from the survey that was sent out last week. I'll get into the meat of this topic by defining what I mean by staffing and explaining how to price assignments properly. We'll also deal with the issues relating to discount requests and go through an exercise to determine the number of resources needed for you to break even. We'll finish up by briefly talking about cash flow issues before addressing your questions. I don't like to talk about myself, and most of what is on this slide really doesn't matter. However, a few points do. I've started up more than 30 companies of my own in a variety of industry verticals, but it hasn't been all trophies or glory. I've failed a lot. In fact, I have sat where all of my clients sit. And like Thomas Edison said, I found 999 ways how not to make a light bulb. That said, I've also had a number of successes, and I've developed a specialty helping staffing agencies succeed. A client of mine doing IT staff augmentation was referred to me 5 years ago. They had been in business for 5 years at that point, but sales were flat the previous 3 years, and profits declined in the most recent 2. Worse, they were projecting to lose money in the current year. They had quality clients, and the projects were generally longer term. They did have a seasonality component to their billings due to the markets they served and were about to go into their slow season. The agency owner was very discouraged, so much so that she was considering closing the business and doing something else. My client didn't have a strong knowledge of finance and struggled with pricing services and negotiating contracts. We worked with her team, focusing on using different pricing strategies and coaching on negotiation tactics. The agency was then able to triple sales in less than 2 years. Yes, pricing does matter. Before we go on to the main presentation, let's review the results from last week's survey. From the people who responded, 27% each focus on healthcare, IT, or industrial staffing, with 10% focused on marketing services. 63% of you are under $3 million in billings, 27% between $3 million and $10 million, and the balance bill over $10 million annually. 53% of the respondents only marked up rate of pay, while 43% added taxes and burden too. Competition, market positioning, and cash flow were the most common challenges cited. So let's jump into the content. Many new agency owners view staffing too narrowly. This often causes challenges in hitting revenue and margin targets. As an example, before 2008, light industrial staffing engagements generated very nice profit margins. Today they don't. And with unemployment benefits being boosted in many states, finding candidates who want to work is difficult. In contrast, during most of the pandemic, placing skilled nursing candidates has been exceptionally profitable, as hourly rates have carried surcharges for those candidates who wanted shifts and for the agencies that placed them too. By adopting a wider view, as implied by the definition on the slide, you can uncover market niches to pursue where there is less competition and more profit. So let's conduct a quick poll to see how often you use, excuse me, your financials to guide decisions.
All right, thank you, Lauren. I did launch the poll here for our listening audience, and I see that we do have a lot of responses coming in. We'll leave it open for about 10 or 15 more seconds to let everybody have time to answer. Okay, it looks like most of us have provided a vote at this time. So I will close things out. And just for your reference, Lauren, it looks like the top response out of this poll question is monthly, with about 43% of us on the line answered. That's followed by quarterly.
Great. Well, thank you very much. Okay, let's move on. Selecting the right pricing strategy for your business and pricing services is extremely hard for several reasons. The quantity of pricing strategies for service businesses is overwhelming. How do you determine which one is right for your business? No one project is the same. There are many nuances, like travel requirements, job complexities, etc., that make it hard to create accurate estimates. Often, you only know what you should have charged as the project progresses. Also, you have to manage your own insecurities, which may cause you to set low prices in the hopes of winning the business. Pricing strategies are crucial for many reasons. Choosing the right, excuse me, choosing the right price has a direct impact on sales and profits. A good pricing strategy doesn't necessarily mean offering the lowest price. Instead, it involves setting a price that's aligned to the value you provide. Pricing strategies shape your prospect's view of service quality. For example, a low price may lead clients to believe that your service quality is poor. Your pricing strategy is a strategic tool to help you achieve your business's objectives. The most common objective, of course, is maximizing profit. But you may have others, such as growing market share quickly, edging out the competition, or building lasting relationships with clients so they'll continue working with you for years to come. The best pricing strategy for your business is the one that aligns with your business objectives. Growth is essential for all businesses. I've had people tell me over the years that they were comfortable with the level of business that they had attained, that their lifestyle was sufficient, and that they were happy. In my opinion, though, there are only two possible states for a business. It is either growing or it is dying. There is no such thing as a lifestyle business, because all that means, in my opinion, is that you have bought yourself a job. Let's look at it a different way. You have $100,000 to invest in a business. You decide to buy stock in Apple Computer. Would you ever say, this is a great lifestyle decision for me. I am fine with Apple's stock price being the same for the next 15 years. Well, if that scenario is not acceptable for your investment in Apple Computer, why would it ever be acceptable for your own business? So if we accept the premise that we need to focus on building enterprise value, the two elements that will drive that process are sales and profits. And at the heart of achieving those is establishing the right pricing. Many new agency owners make the mistake of shortcutting the process by only marking up the pay rate for staff personnel. But the true cost of the worker includes so much more. Therefore, you need to add in additional items, including employer-paid taxes like Social Security, Medicare, state and federal unemployment contributions, workers' comp, benefits, paid time off, and training. Of course, you'll also want to factor in onboarding costs such as admin time, testing, and background checks. In addition, some agencies will keep particularly skilled or placeable workers on the bench between assignments rather than laying them off, in hopes not to lose them to a competitor. If you have such a policy or these types of resources, you must build that cost into your model as well. There are other factors that play into how resources are priced for a particular project. Is this a request for a single resource? Or does your client need many workers right away or over time? Do the workers require specific skills, or are the needs more basic? How difficult or easy will it be to find a candidate for this project? Will this project be short and therefore more difficult to recoup your cost and make money? Or will this be a long-term assignment where the resource won't be called away by an early hire clause, such as for temp to perm? Market considerations also apply. How many competitors do you have in your area? Who do you regularly compete against for assignments? Are your competitors smaller than you or significantly larger with more infrastructure, resources, and recruiting muscle? Do your competitors work with clients and have offerings similar to yours? Or do you have a niche or specialization? What are average rates in your geographic area? Markups can range from 35% to 100%, depending upon your location and the types of skill sets needed. It goes without saying that what you sell determines the price you set. In staffing, there are skilled resources like high-end data architects or even doctors and engineers. Or at the other end of the scale, light industrial assembly workers, janitorial, and clerical workers. As most of you know, there are additional pricing considerations based on factors such as job type, like we mentioned on the previous slide, or staffing model, whether temporary staffing, temp to perm, or permanent placement. You will be confronted with requests and opportunities to discount your rates. Should you or not? Well, like most situations like that, it depends. You'll be most tempted to do that for high volume or longer term clients. In general, though, you should always get full rate for the first resource assigned to any project. After that, it will depend upon how close you are overall to your agency's profitability break-even point. So here's our second poll question dealing with calculating break-even levels. Then we'll run through an example of the actual calculation.
Thank you, Lorne. Great information. And you should see that second poll launch to your screen. I see a lot of people starting to provide responses. Thank you for making this an interactive session. Okay, give it just a few more seconds. Okay, most of us on the line have voted, so I will close things out. And it looks like, as far as responses go, we had about 78% of our listening audience say yes.
That is excellent. So as when dealing with most aspects of technology, the doctrine of GIGO, or G-I-G-O, applies. GIGO, of course, stands for garbage in, garbage out. So let's keep in mind the objective of this exercise, which is to determine how many resource units, i.e. staff, need to be placed on projects for you to actually achieve break even. Why is this important for you to know? Because it will give you a benchmark that indicates how much flexibility you might have in setting pricing. So let's get started. Assume we are dealing with an agency billing $2.5 million per year. The first input for our example of ABC company, which must come from the company's financial statements and forecasts, is the current projected profit or loss. For this example, we are projecting a down year with a net loss of $180,000 or $15,000 per month. And of course, you know, many businesses last year in the pandemic were projecting at some point in the year a net loss situation. So in this case, since we are doing a break-even calculation, we're going to show a profitability target of 0 rather than any specific dollar figure. The next input is gross profit margin. You must calculate the actual average margin for all current staff assigned to clients. Here, let's assume ABC's resources average out to a 32% margin. The next input to the model is billing rate. As with the gross profit margin we just talked about, this value must be calculated based upon the average billing rate for all current staff assigned to clients. For the case of ABC, this is $45 per hour. This particular model is based on a 160-hour billing month, which is a little lower than the standard 21 or 22 workday month. However, the model can be structured based on any agency's actual contract terms. The calculations for this example company reflect that the agency needs to place 7 more consultants at an average rate of $45 per hour to eliminate the expected $15,000 per month shortfall. Note that we round up from 6.51 since it is hard to place a fractional consultant. Can you see how knowing this type of information might allow you to manage your agency better? Do you think it could help you develop better sales and pricing tactics too? For our clients, this calculation alone has made a huge difference. One area which we have not talked about, but which could occupy a whole webinar in and of itself, relates to cash flow. How you get paid when you bill for the services your team renders, and how quickly or not. In most cases, you don't get paid right away. And even if you do, likely you were required to pay the assigned staff at least once before you were paid by your client. Whether you paid those wages out of your agency's funds or drew on a line of credit instead, you should include the cost of carrying that debt in your pricing model. While we are on the topic, I'd like to mention that Advanced Partners, who is sponsoring this webinar, provides funds to staffing agencies against their client billings. Having a source of funds like this is essential to assuring that your agency can meet all of its financial obligations in a timely manner. A credit line against receivables also enables agencies to grow more rapidly. My goal and that of my company is to give back to the entrepreneurial community and to have our clients be successful. We try to make sure our clients avoid the mistakes that I had to learn the hard way through 30 startups. We have a unique program for staffing firms where we actually guarantee specific minimum top and bottom line performance improvements over the duration of the engagement for those firms who qualify. In appreciation for your attendance today, I'd like to extend a no-cost offer to assist with any questions specific to your business. Feel free to reach out to me for a complimentary session to discuss your pricing or other financial questions. I also promise that there will not be any sales pitch involved, just assistance. I'll open up the floor now to any questions you might have.
Okay, thank you, Lorne. Great information so far. I do have a couple of questions that came in. First one says, do government, let's see, it reads, I do government contracting. There are a lot of regulations that limit what I can charge. How do I maximize my margins in this environment?
That's a great question. Yes, government contracting does pose its own challenges. That said, there are opportunities within government contracting to pick the types of projects that you get to bid on and to chase or to pursue those avenues or those opportunities where you are allowed a little bit more margin or there is more spread available with the limitations of the calculations that you have to do. So obviously working with lower priced clerical or janitorial staff might eke out pretty tight margins, but there are also government contracts that have more skilled labor where your margin amounts to more dollars.
All right, great insight there. Another question came in. What impact does doing direct hiring play on the financials of a staffing agency?
So direct hiring is a different model. Yes, it's going to help your bottom line because you're going to get larger sums of money in a lump sum at different points in time. It's not going to provide, of course, recurring revenue, which is what staffing is all about. Most business, the other challenge with direct hire is that if too much of your business is direct hire, it's not like you get to place that person again. And so once that assignment is done, it's done. And you can't place that position anymore. So you have to get another customer. So you're always chasing new customers when you're doing a direct hire model versus doing staffing where it is recurring revenue because a body is placed and the revenue is recurring month over month.
Great, good insight there. In relation to direct hiring, another question came in, and this one reads, what is best, direct hiring or employer on record? Do you have any guidance around that?
So those are variations on a theme. I guess the answer is it depends. And you know, a more detailed analysis of the exact circumstances is probably warranted for me to give you a more accurate answer. And you can certainly use your 20-minute consultation for that. I'll be glad to discuss it with you.
All right. Another question that we had come in, it reads, how do you price hourly services if the benefit prices fluctuate? Thoughts on that?
So take a look at the length of the assignment and average out what the benefit prices might be over that long term. Even if your benefit prices vary in the short term with all of your staff, you can average it out over time and at least budget for something. And over the long run, you'll be pretty close.
All right. Another question came in. They mentioned that they specialize in the aerospace and transport sector. They are planning to diversify. Is there any advice on getting leads in other sectors other than LinkedIn?
Well, you know, some of the easiest ways of doing that would be to hire somebody who has a lot of connections in another industry vertical, right? That would be one way of doing it. Another way is to do your research and you know just take a look at trends in the marketplace in order to identify where the needs are, and then from that that gives you more guidance as to where you might focus your efforts on business development. By the way, I would like whoever's on to kindly type in the chat box your biggest takeaway or aha insights from today's presentation while we're talking and answering questions from the others. I appreciate it. Thank you.
All right. And then another question came in. What is a typical temp to perm fee or scale of fees? Any thoughts on that question?
So it's all subject to negotiation. You know, for years and years, it was thought that real estate commissions were 6%. And we've seen over the years that, you know, that has eroded quite a bit since efficiencies have come into the process. And now you see commissions ranging anywhere from 8% down to 1%. So it really is up to you to sell value as opposed to having a set number. It's important for you to develop a reputation for quality, and I think some of our slides address that fact, is you have to develop a pricing strategy of who you want to be in the marketplace and how you're going to show up. What types of workers are you going to be placing? Are you going to go for the lower end or are you going to go for the higher end? And that's going to help you determine, you know, how you position yourself in the marketplace and how much value you bring to an ongoing client that uses you over and over and over again. If you demonstrate value to your clients, you will always be able to charge more.
All right, thank you. Another question came in. What is the average markup for hourly engineering sector? And I guess this can apply with some of your other more specialized fields that you covered in your presentation.
Yes, and obviously more skilled staff allows you to charge more, but it is going to depend a lot upon what area of the country you're in. Rates vary widely. Uh, Obviously, rates in New York City are different than Topeka, Kansas, or even Tupelo, Mississippi. So it really depends upon where you are, what the geography is, what types of personnel you're placing.
All right, thank you for that guidance. I know a lot of good feedback has come in here in the last couple minutes based on your latest comments regarding aha moments and biggest takeaways. So thank you for providing some of that. One question that came in mentioned, can we get a copy of the breakdown calculation process? I thought it was gone through pretty fast, which is understandable, but as I understand, we will be providing a communication to everybody on the call after this is has concluded here. Lorne, any thoughts on that?
Certainly. So if you would like to get a copy of the model, feel free to email me and I will send it out to you along with instructions on how to use it.
All right, I think at this point we can close out our Q&A section, and I will turn it over to you, Lorne, to close us out.
Well, thank you very much for joining today, and thanks to Advanced Partners for hosting this session. I've appreciated their work in getting this set up and promoted, and everyone else have a great afternoon. Thanks for attending.